What's up, YouTubers? This is Big Money Finance here with the story of Bill Hwang and how his story is so exciting. We have what is arguably the fastest loss of $20 billion ever in the history of finance. This is one guy who leveraged up and lost it all. So just who is Hwang? He's alumni of the famed hedge fund Tiger Management. Not too much is known about Bill. He's a very reserved guy and doesn't do a lot of interviews. Some of the few that he has given, he brings up his religious flair. He says that he manages to read the Bible front to cover in 7 days. Another interesting Bill story is at one point, Tiger Management, his previous hedge fund, had a $2 billion wrong way bet against Japanese yen. Everyone was panicking. Bill has allegedly claimed to enter the room and said, guys, calm down. It's only work. We do our best. I certainly would not be saying that if I personally lost $20 billion. I feel like you need to do a little bit better than that. He took $200 million into his family office, Archegos, and turned it into $20 billion net worth at the end of March here. What makes the store interesting is it all came crashing down at the end of March. Bill had heavily levered up on a few individual stock positions, and notably Viacom CBS. The stock price on this had gone from $12.43 a year ago to $134 on March 22nd. The incredible interesting thing here is he made enormous levered bets on risky stocks. Those bets worked perfectly until they didn't. How he did this is a notable exception. Unlike you and I, Bill was able to approach Wall Street banks and get 5 times leverage on his funds in what is known as a total return swap. These total return swaps do not require Bill to hold the actual stock, but is just a bet with the various banking groups that the stock price will continue to rise. The crazy thing about this all is the other banks had no idea. You think that would be some basic due diligence in lending someone hundreds of millions or billions of dollars. What makes this even more interesting is some Wall Street banks have seemed to escape perfectly fine out of this. You had Morgan Stanley and Goldman Sachs liquidate the positions early. It seems that some Wall Street banks were left holding the bag. Notably, Credit Suisse Group lost over $5 billion on this trade. Certainly, they were caught with their pants down. What will be interesting to see is how reform changes or what is made different in this situation. Leads to an interesting trade. And start with a lot of money. You borrow a lot more money and use that money to buy a small handful of stocks, basically cornering the market on those stocks and pushing up their prices. As the prices go up with leverage, you have more equity and your positions will automatically deleverage. This works by having $10 of borrowed money becoming less and less over time. For example, if you use $20 of your own money and borrow $80 from your broker to buy $100 worth of stock, you have 80% leverage. If the stock goes up to $200, you are now down to 40% leverage. You still owe your broker that $80, but now that the stock is worth $200. If the stock falls by 25%, that's fine. You're still in the black. Your broker has ample security for the loan. What's so interesting about Bill's story is even though these stock prices have rose, he still continued to lever up and lose it all. Now, for what is probably the most exciting part of this, is Bill continued to borrow more. Looking at Viacom CBS, its bankers assumed that the stock had gone up for company-specific business-related reasons, so it decided to sell some stock. But in fact, the stock was up because Archegos bought a ton of it. When the Archegos didn't buy the stock crashed. This caused the deleveraging that lost Bill his $20 billion. Normally, when Wall Street is lending to these family offices or these hedge funds, unleveraged bets, they know that they're diversified and that their losses are offset by gains in other positions. The problem with Bill's accounts is he only had concentrated leveraged positions in a small number of stocks. We've seen time and time again of how this can blow up, and certainly Bill should be known as the Wall Street bets leader of our generation. The amount of money that he's made and lost in a single period puts deep value to shame. What is interesting about Bill is the fact that he is so unknown until this finally happened. It's rare that someone in such a small position is able to cause such big losses to these positions. What's interesting is the fallout across the market when they heard about the family office blowing up. It's never a good sign when you have companies failing, and that thankfully didn't cause market deleveraging. This strategy works well if stocks only ever go up. The unfortunate thing is if it goes down at all at any point, it completely wipes out the trade. What happened here was Viacom CBS planning to sell $3 billion in new cash to fund strategic plans. What everyone assumed was Mr. Hwang would carry about $300 million of the deal. But sometime while they were raising money, Mr. Hwang changed plans, and it wasn't clear why he wasn't participating in the offer. This spooked the market and led to the decline in Viacom CBS shares. This caused a cascading effect where he had to post additional collateral for the loss in the shares of Viacom. Fortunately, because as we know, Mr. Hwang was leveraging up as much as possible. He had no collateral to post at this time. This led to the margin calls that we saw. As we discussed earlier, the most interesting thing is how the banks did the deleveraging of Bill's positions. Some banks waited for each other in terms of asking if they could do a block share of all of the accounts together. What Morgan Stanley and Goldman Sachs did to avoid the losses was sell the positions before others could. They blew out the positions in a series of block trades on Friday, March 26. This trade got a lot of attention and spooked the market. It brought down the prices of all stocks that Bill had and put pressure on the other banks to deleverage the position, and ultimately led everyone to blow out the position. Is how Bill will come back now that he's lost everything. That's all today on the story of Bill Hwang and how he lost $20 billion in the fastest way possible. Hope you enjoyed the video today. Leave a like, comment, and let us know what you'd like to see more of. And we'll have a lot more videos soon here, posting hopefully weekly to be able to give you more information on finance and the happenings on it on a regular basis. Thanks for joining Big Money Finance. Hope you have a great day.